For years, we've all heard it, right? Crypto is the Wild West of finance. It's been this untamed frontier of crazy innovation and, let's be honest, a ton of risk. Well, it looks like the sheriffs are finally riding into town.
Welcome to Chain Bureau, where we deliver smart crypto insights for smart investors. Today, we're digging into what happens when that Wild West finally gets a rulebook.
So yeah, the untamed frontier is closing down. And as all these new rules get written, it brings up a really big question. Who is actually being protected here? Is it us, the investors? Is it the companies building this stuff? Or is it the old school financial system itself? That's exactly what we're going to break down.
First thing you got to understand is that this isn't just happening in the US or in Europe. Nope. What we're seeing is a coordinated worldwide wave of oversight. The days of operating in some kind of regulatory gray zone, yeah, those are numbered, no matter where you are on the planet.
Just take a look at this snapshot for 2025. It shows you just how global this whole thing is. And it's not like everyone's using the same playbook, but the push is happening everywhere at once. Brazil, they're focused on who gets a license to even operate. Hong Kong is tackling new stuff, like staking, but with some pretty strict safeguards. Over in the UAE, they're all about figuring out a framework for stablecoins. And the entire EU is getting serious about centralizing its anti-money laundering rules. It's a patchwork, for sure, but the message is crystal clear. More rules are coming, everywhere.
And this isn't some slow crawl, it's an all-out sprint. This number, 2.5 times, that's the increase in authorized crypto service providers in the EU in just 2 years. That's not just a little bit of growth. That is an entire industry literally scrambling to get on the right side of the law, and they're doing it fast.
So what does getting compliant actually feel like for a company that's in the trenches? Let's zoom in on one story to make this whole abstract idea of regulation feel, well, very, very real.
Okay, check out Gemini's journey for just one license in the United States. They applied way back in March 2020. The final approval? It didn't land until December 2025. Just let that sink in, a 5-year process. I mean, for a tech company, 5 years is an eternity. That's millions of dollars in legal fees, thousands of hours tied up in paperwork, all just to get the green light to offer new products. This is the new reality. It's long, it's expensive, and it's a super tough path to legitimacy.
Now, you'd think companies would absolutely hate this, right? But listen to this quote from Gemini's president. He's calling the regulator pro-business and pro-innovation. Why on earth would he say that? Because from their point of view, this incredibly painful process is basically the price of admission. It builds a protective moat around their business, it weeds out the smaller guys, and it gives them the regulatory clarity they need to bring in the big institutional money. It's their ticket to long-term growth.
All this complexity, it definitely creates challenges, but it also creates opportunities for anyone who's prepared. Navigating this new landscape really requires an edge. If you're looking for one, you might want to check out the link in our bio. You can get 24/7 access to over 5 powerful trading indicators from VIP Indicators. They're designed to help you make high profits and can predict any trading market with up to 93% wins. Plus, they work on any device.
Okay, so we've seen the global picture and the corporate headache. But what about you, the individual user? What does all this mean for the crypto you actually hold? To figure that out, we have to do the one thing nobody ever does. We're going to read the terms and conditions.
Let's start with this key term you'll find in the Coinbase user agreement, custodial asset. This is the legal jargon for the crypto you keep on an exchange. It says the assets are held by a third party, the exchange, on your behalf. You own them, but the custodian controls the private keys. And believe me, that distinction is absolutely everything.
So let's really break down that fine print. Point number 1, the agreement says, Title 2, digital assets shall at all times remain with you. Awesome, sounds good. But point 2 also says, you shall bear all risk of loss. And then point 3 confirms that Coinbase keeps control of the private keys. Let's just put that in plain English. You get the title, they get the keys, and you get all the risk. That's the deal. That is the fundamental trade-off you make anytime you use a custodial service.
So really understanding that balance of risk and ownership is step 1 to being a smart investor. Step 2 is actually managing that risk. And for anyone looking for professional-grade tools to do that, the team at VIP Indicators has you covered. You can get 24/7 access to their 5+ powerful trading indicators, which are designed to help you chase high profits and predict market moves with up to 93% wins. And it works on any device. Again, all the info is at the link in our bio.
Given that risk, and especially after seeing some huge exchanges just spectacularly collapse, the industry knew it couldn't just sit around and wait for regulators to force their hand. They had to step up and build trust themselves. And that's led to a major push for transparency, for a way to prove what's actually in the vault.
And the main tool they're using for this is something called a proof of reserves, or POR. The idea, which was really well defined by researcher Nick Carter, is pretty simple. A custodian does two things. First, they publicly prove, using cryptography, that they actually control the assets they claim to have. And second, they provide proof that their liabilities, that's all of our balances added together, don't exceed those assets. In short, they're proving they can actually cover everyone if they all wanted to withdraw at once.
But, and this is the critical part, not all proof of reserves are created equal. A rigorous one requires that cryptographic proof of assets and an audited accounting of all the liabilities. But then you have these informal attestations, where an exchange might just post a list of wallet addresses and say, "See, we have the money." Without proving the liability side, that's not proof of anything. It's like showing someone your bank balance without mentioning your massive credit card debt. As a user, you should always demand the higher, more rigorous standard. Demanding that kind of real transparency gives smart investors one type of edge. Another comes from having the right data. So as we start to wrap this up, it's a good time to mention again that you can get 24/7 access to over 5 powerful trading indicators from VIP Indicators. They're designed for high profits, can help predict any trading market with up to 93% wins, and work on any device. You can check them out, you guessed it, at the link in the bio.
Okay, wow. We've looked at this from the global level, from inside the corporate trenches, from your perspective as a user, and even from the industry's own response. Now, let's pull it all together and try to figure out what this new era of crypto really actually means for all of us.
So, what does this all add up to? We've basically watched crypto go from being the Wild West, where the rules were unwritten and anything went, to a rapidly maturing ecosystem that now has a structured and, yeah, sometimes really complicated set of rules. You can really think about this whole maturation process in 3 big connected steps. First, you've got global rulemaking that lays the foundation. Then you've got corporate compliance, where companies are spending a ton of time and money just to play by those rules. And third, it creates this new balance of user responsibility, knowing what you're actually agreeing to, and industry transparency, with tools like proof of reserves to help us verify trust. Look, a new era demands new strategies. And for a lot of people, it's going to demand new tools. It's why we've mentioned our partners at VIP Indicators. So for the last time before you go, check out the link in the bio to get 24/7 access to their suite of 5+ powerful trading indicators. They're designed for high profits, can predict trading markets with up to 93% wins, and work on any device. But tools aside, this whole new era really leaves us with one huge fundamental question. Will this new era of rules and compliance and transparency, will it finally be the thing that brings crypto into the mainstream, making it feel safe and accessible for everyone? Or will it end up taming the very permissionless, chaotic, wild innovation that made this space so revolutionary in the first place? I guess that's the big question we'll all be watching get answered.